Should be live on YouTube and hopefully with no sound echo today. Today is February 14th. Happy Valentine's Day to all the lovers out there. I'm an associate member of T3 Trading Group, an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. There is my unchanged position disclosure from yesterday. Traded every one of those names today, but I'm still in them. Also traded some SI today. I traded that silly IPO today. Okay. So, yeah, Sumo had been on the list forever, right? Not on the list anymore. Not on the list anymore. Been on there for a very long time. I did a lot of trading in that stock over the course of the last, I mean, that was a long hold for me. Sometime in 2020, I think, is when I first got involved in that. Lot of active trading in that one around the core position. August 2020. Yeah, wild. See, that's patience, right? That's patience. I got the buyout. A little disappointed at the buyout price. $12.05, I think, is where that's going to be settling in Sumo. I was really looking for more like 14 to 16, but what can you do? What can you do? Still was a pretty nice move when the information began to come out that they were looking at acquiring this thing from where it was trading down around 750 or so. Anyway, let's go over to our market. Wow, look at that. Today's a CPI day, and it almost doesn't look notable. We had a lot of volatility, a little bit of a pickup in volume, but nothing compared to the movement that we saw on like December 13th or on November 10th or on October 13th. It was a much more muted day, a lot of intraday volatility, and I think that's kind of appropriate for what the number was. So we discussed in the morning meeting, because the number came out at 8:30 before our morning meeting, the month-over-month CPI was in line, month-over-month core, month-over-month regular CPI was in line, and year-over-year came in a little bit hot at 6.4%, with expectations that were, I believe, at 6.2%. So I did like the idea pre-market of referencing that kind of JP Morgan note that's been coming out on their expectations on where the market should trade based on where the number is. Though, as much as I like looking at that for a reference point, we did also have to note that I think that JP Morgan, they've been doing that for every CPI number for a while now, and I think that they've been wrong every single time, including being wrong today. So they said a 6.4 number, I think, should have us down 0.75% to 1.5% for the S&P. Here at the end of the day, we have our SPY down 0.1%, our Qs up 0.7%, with honestly a surprising degree of relative strength as far as I'm concerned from the NASDAQ, and our IWM down very small. But I think it was worth taking a look at what JP Morgan was talking about just to give us a reference, because what I noted was, all right, 6.4% according to JP Morgan, we should be down 0.75 percentage point to a percentage point, but that's also with the month over month in line. So I think you had to actually discount that. So maybe that could have us, flat to down 0.75%. And that's kind of where we ended up, though, with a wild amount of volatility. And that's kind of what my thought process was after that number came out. I implemented the strategy that I've implemented for a whole bunch of CPI reports now at this point, which I discussed in the morning meeting briefly. Happy to kind of mention it again. What I've been doing for every one of these CPI numbers is I look at what the options market is pricing in as far as a move, which for this was like a 1.8% move is what the options market was pricing in. And I look at the names I'm involved in, and if they're higher beta, so more volatility than the market, then I add on to that. So, you know, if it's 1.8% and it's a more volatile stock, instead of being bid down 1.8%, I could be bid down 2%, 2.5%, maybe even 3%, kind of depending on the name that I'm looking at. I'll cluster some bids around that spot, thinking that if it's a really bad number, the market goes all the way down there, I can get filled on those bids. It's a little bit of a dangerous strategy because you can't really have an immediate stop loss in place, so you got to make sure that your sizing is appropriate. And you know, most of the time I can at least get a little bit of a bounce, and in some occasions I've gotten actually fantastic follow-through. Yeah, Josh saying here that the Senate Democrats seek to quadruple stock buyback tax in new bill. That can't be good for the market. I agree with you. That was also mentioned, though, by President Biden in his was it State of Union address recently, that he wanted to quadruple it, and the market didn't seem to move on that. Anyway, so that was kind of my strategy coming into the CPI. But the CPI move was muted compared to what the options market expected. So we did have it's kind of crazy, a very quick initial downtick followed by an initial uptick that over time really resolved the downside by the time this market was actually opening. So I didn't get filled on any of my stocks that I had bids for except for one. So like one example I had was like Apple. I had bids in front of, which eventually actually got there. But I'm looking for the move on the initial reaction. So the initial reaction in Apple only went down to 152.75. Maybe in hindsight here, I could have been a little bit more patient because I had all these bids clustered based on my thought process of where the options market is pricing things. Sorry, I got distracted by something. You know, based on my approach here with what the market is pricing in for the options move, I was thinking that Apple could see 151 on an initial downtick. So I had you know, like a bunch of bids clustered right above 151 to try to get filled on that initial reaction. The initial reaction didn't get filled, so I ended up basically canceling that. The only one out of all my stocks that actually got filled on was Snap, which seemed like it had an exaggerated move to the downside compared to the market for whatever reason. I don't know if an algorithm just pressed the wrong button or someone fat-fingered, so I got a little bit lucky there. I got filled in the mid 1030s and the mid 1040s in Snap, and then within like a couple of minutes, I was selling stock in, you know, the mid 1080s. So that was the only one for my strategy today that actually really worked out. But it makes sense that we did not get as big of an immediate, exaggerated reaction to a number that came in line month over month, and again was just a slight miss on the year over year. Market did eventually begin to resolve itself down, like Cody was mentioning, like what does the good book of technical analysis say on a market that goes down and then up and then down and then up and then down to new lows and then up kind of into the close. And that's basically what happened, right? We ended up opening lower. We had this immediate move to the upside, which I was calling for when we were kind of breaking yesterday's high, that this is just a momentum short squeeze of people who are trapped. And that's how the market works. We've seen this happen so many times. It even happened in a microcosm at 8:30 when the number came out. When everyone's looking down or that initial move is down and then the market's able to break up, even if the market wants to end up going nowhere, it's going to then overshoot to that upside because of everyone that's trapped who were sellers earlier. If you were a short seller, you're getting squeezed. If you were a long seller, you're maybe missing out, or you're at the very least not selling on the offer on the way up. So they can really exaggerate this move. So this part of the day here from 10 a.m. to the highs at 10:15 or so, I was entirely just telling everybody, guys, this is a profit-taking spot. No new longs, and you could maybe look for shorts, but you got to be very careful with those shorts because we're looking at a little bit of a momentum squeeze right now. And that's pretty much what happened. We attempted to create this bull flag, and it was crazy how hard this bull flag failed. We attempted to create this bull flag for the SPYs and the Qs, and you could look at a bunch of stocks that I know people are looking at. Like Microsoft was trying to make this flag. Meta was kind of trying to make a flag. Tesla was very clearly making this flag. But what was the key that this flag here for the SPYs and Qs was going to fail? It was two things. One, time of day. Two, the IWM. Time of day here, 10:20. You're approaching 10:30. It becomes very difficult for an accelerated 5-minute bull flag to be able to give any type of continuation because the ADMA has not caught up to that base on the 5-minute, when really what matters at that time of the day is more the 15-minute. It's really hard to get continuation if the 15-minute hasn't caught up, let alone the 5-minute. So that was signal number 1 to not get suckered in by this bull flag. And signal number 2 was that the IWM never bull flagged. Spies and Qs tried to create that flag. You can find a bunch of stocks like Tesla, very clear and obvious one that tried to make that flag. IWM was rapidly price correcting down. And I was like, okay, the IWM is leading a price correction lower. I remember saying I really want this IWM to pivot at 193 if these flags are going to hold up. And it did not pivot at 193. It did not attempt to pivot at these moving averages. They wrecked this market all the way down, even had the spies make new lows just to create, now you have extension to the downside, kind of creating this wild looking downside tail hammer. You still have a very volatile market. Still not a lot of liquidity. And off of this candle, right as I was kind of signing off the virtual trading floor, I was saying maybe we could get a bounce back to 412 or just under 412. But the probability of a new high when you have 100% retracement of this type of momentum move coming in on the day is very low. So if you're taking the long here, you should really be having a game plan that is going to be less greedy and doing your profit taking more readily. And I know Pat and a couple people were like, but Derrick, you were on vacation when Jerome Powell was speaking last week, and we actually had a 100% plus retracement of a momentum move, and then a new high came in on the day. I get it, but again, this is a game of probability. Low probability does not mean zero probability. Low probability situation was able to happen, I guess, on that one day when Powell spoke when I was on vacation, but it's still a low probability situation. And today, even though the market ended up recovering pretty decently into the close, we never were able to break those opening highs. Good little bounce back off that hammer, then new lows kind of came in, and then we started to drag our way up. One of the Fed guys spoke at 1 o'clock to give the market a little bit of a bounce back. Then another Fed guy spoke at 2 o'clock that made the market pull back a little bit, and we ended up closing decently. So at the end of the day here for the daily chart, you had a ton of volatility with this candle, but nothing has really changed. I was nervous coming into this, and by the way, it's notable that what I was saying in yesterday's afternoon meeting and yesterday morning about why I was nervous about the CPI with what I was seeing kind of with housing actually came true. It seems like the area where inflation was stickiest that led to that little increase in the CPI was actually from housing. But despite that, the market technicals here still were able to hold in. We are still short-term bullish, intermediate-term bullish, and honestly, we are even arguably long time frame bullish now with this market creating that higher low in December, followed by this higher high here in February. Moving averages have completely caught up. We're above that trend. One thing I still really want to see is the 200-day curve up on the SPYs. The 200-day is still actually pointing slightly down, even though it's flattening out. You really want that 200-day to curl up. I think that would kind of be the final signal here, technically, that bulls have fully regained a degree of control on every time frame if the 200-day moving average is able to catch up. I think that is pretty much all I've got from a big picture perspective. From the small picture, trading was kind of tricky today from a small picture, as you can see even here from the market, just with how sloppy the market was. It's how a lot of stocks were as well. I thought Pat had a great call out with Google early on in the day for like an RDR type of situation when it was coming back, and there was just a wall of sun that was kind of coming into 94 that caused that thing to more or less fail, but they were able to get the stock above 94 into the close. I really like that SI news pre-market of Citadel taking a stake. And I was very surprised that it traded as poorly as it did off of that news. Pretty big short float on it. I have not been a bull by any means on this company, but Citadel's going to be doing their due diligence. I think if they're coming in and they're getting involved in this type of stock, I think it means it's not a zero. And in some ways, this SI has almost been priced to go to zero at this point, especially if you consider, kind of where this thing came from. Obviously, bubble prices of $240 down to under 10 or maybe $210. Citadel coming in and taking a stake. This became a big focus of mine. I traded the heck out of this stock today, and I ended up making a few dollars in it, but it was very difficult. I traded this BFRG today, which was also trash. Never really got too heavy on it. Ended up trading a little bit of volume in it. Just AI being so hot, I wanted to kind of come in and take a little bit of a gamble on an AI IPO with a lower float, just in case they kind of run it. More or less ended up flat on the name, down very, very small on it at the end of the day. And Eddie Webb saying that the SI short float, according to FinViz, is 78.6%. Yeah, I don't understand. I really thought on that news they could squeeze this to 20 today in the open. And they eventually did have this thing catch a bid. It went up to 18, but they made this so hard. Because this tail is not real. The stock broke its low at 10:45 today. So it was almost impossible to keep stock through that. Luckily, I was able to kind of hold on and capture this move, and it really liquidated a lot of my position into this move. So that's it. Josh saying that Soros came out and said he added to his short, which countered the Citadel news. All right, I didn't see that. I did not see that. That would have been good information at the time. Okay, cool. I think that's all I got. I'm happy to answer any questions that anybody has. Not seeing anything yet in the VTF, so feel free to post questions in there. Looks like there's a bunch in YouTube. Sounds good. From Cheese, the first thing I'm seeing, what are your thoughts on Netflix through yesterday's high? So Netflix today through yesterday's high? Yeah, so Netflix getting back above 360, I think is really key and really solid, and it could be a spot that you look for. And I also like that the stock was acting so strong. This is way stronger than the Qs by this third bar. Yeah, my initial thought was going to be to say that I didn't like chasing any longs. This was what I was telling the team. I didn't like chasing any longs after 9:55 today, because I thought that this was entirely a short squeeze. But Netflix was so relatively strong, and it broke through 360 at 9:40. 9:55 is when I didn't want new longs. 9:40, I'm still fine with new longs, especially in relatively strong stocks. So I wanted to say I didn't like the idea, but I do. It's super relatively strong. It's green first. It's breaking 360 at 9:40, well before the market is getting into the area where I did not like new longs. So I think that is a good trade. And then obviously kind of failed down when the market did. So I like the idea there. From Sebastian, do you feel like intraday trading has been harder the past weeks? I feel like everything is having way more fake moves than usual, and it's easy to get caught. Well, I was on vacation last week, so I don't have any feedback for you on last week. It did look like it was a little bit of a trickier week last week, and I was kind of glad I missed it. But outside of not being able to give you that feedback, I have not noticed that. I've been doing a pretty good job with my day trading this week and the week before I went on vacation. By focusing, I've been having like a solid, good, pure day trading winner almost every day. Yesterday was Fastly. Today it was SI, though I do think I left some money on the table with SI, and it was tricky. I've been having like a solid in-play day trading winner almost every day. So I haven't noticed that, but again, I did not trade last week. Over on the VTF here, some questions from Noah for ignition candles. I know the bottom of the candle is an appropriate stop. Correct me if I'm wrong. Would you ever zoom to 1 minute to look for a stop? For example, shop, ignition bar at 9:45. Okay. Stop would be 48.48 at 9:45. 9:40. Well, hold on. Let me try to figure out what the breakout is. You're looking at $50 in Shopify? Is that what you're looking at? I'm not sure what you're looking at as a breakout. Curious to know what level you're looking at for your breakout, because you're saying that the 5-minute ignition candle at 9:45 would be 48.48. That's not accurate. The volume's really coming in at this 9:40 candle, which would have the 48.48 low on it. And an ignition bar is specifically, okay, so there was news that came out. An ignition bar should specifically be a daily chart breakout. If it's not a daily chart breakout, it's not an ignition bar. I don't think I would characterize this as an ignition bar. It's a candle that's significant because it's got a ton of volume. But for me, very specifically, an ignition bar is where a daily chart breakout is occurring. But for the sake of this exercise, let's assume for a minute that this is an ignition bar. So the stop loss would be 48.48. If you look at a 1-minute chart, which I'm not going to do because I don't even have a 1-minute chart, it could be 48.63 or 48.89, depending on which candle. I don't look at 1-minute charts. I don't look at 2-minute charts. I don't use 1-minute ignition bar lows. I never have in my entire career. I have probably used a 2-minute ignition bar low over the course of my career, but I don't like to. I just think that the time frame is too small. You can very easily get shaken out on volatility and have trades work. So for me, it's going to be that 5-minute ignition bar low. That's what I use. That's what I do consistently. That approach is what works for me, and that's what I'm going to stick with. And if I can't afford the risk, then I don't take the trade. So I hope that helps. From Bill K, do you ever do anything with 13F info or too outdated to be actionable? It's funny you asked that question because I was just going through those 13Fs as Pat was posting them and typing up these stocks to see what was moving, and nothing was moving. There used to be that I felt like 13Fs, certain managers or certain size of positions for managers would move things. So I was immediately typing up Apple, Warren Buffett. The new positions or increased positions from Warren Buffett used to always seem to move those stocks. And it didn't for Apple. It didn't for Para. Is Para up now? Maybe this went up very, very small now. But the initial reaction was nothing. So I don't do anything. And for sure, so previously, because I've seen these things move, they could be trades. But I've always known that the information is very outdated. I'm trying to think of what name I was looking at. I don't remember. I was looking at one of the stocks on the 13F. It's had a really, really big run. Oh man, I don't even remember which 13F it was. But I'm just looking at it, and I was like, this guy could be 25% in the money by now from where this thing traded over the course of the last quarter. So the stuff is like super outdated. So I think that that information is for the most part too outdated to be actionable, outside of the fact that other people might come in and buy it when the news hits, which could make it actionable briefly, if that kind of makes any sense. I do like to pay attention to the information just to know it. I like having an idea of where, as much as I can, of where Grandpa Warren has been buying Apple. So I remember he was buying Apple in March and then stopped because he said the price went up too much. And my assumption was, and I just like knowing this, that he was buying Apple here in the low 150s, stopped buying it because it went up too much, and it made it sound to me like he wanted more. So I remember when Apple was then trading at these lower prices, these 130 prices, just knowing the way that Warren Buffett thinks, if he likes Apple at 151, he likes Apple at 135, provided that nothing changed with the company, which nothing really did, as far as I'm concerned, for the most part. So I like paying attention to that, and I'm not surprised at all to see that he added. But where did he add? 130? 140. I can't tell you. So yeah, that's kind of how I think about it at this point, Bill. From Pat, I guess fair to point out we looked for market to not have a real big down day today, as when the SPY made the day low. IWM. Okay, so we didn't think that the market was going to. So Pat, just looking at layers of probability, when the market was making new lows, that IWM was not really making new lows. IWM held the opening low all day, and that Apple, which was very weak off the open, like very weak off the open, didn't, I guess, it ticked new lows super briefly here at 10:45, but for the most part held its opening low as well. So you're just paying attention to those other layers of probability. The VIX never made a new high either, so that did not confirm the market new low. And relatively strong names like Tesla, Nvidia, and Snow kept holding their strength. Yep, so that's important information. So all those layers of probability that we want to be constantly paying attention to. Did Upstart reopen? How is this positive? I must be missing something. That guidance looked atrocious. No idea how the thing is trading positive right now. From Kyle. When looking at names trading near key daily levels, but there is also extension in the daily, do you have a certain percentage of daily extension you look for? For example, if the stock is more than 10% extended from the daily EMA to avoid trading, or is it more of a feel thing? I don't like using the term feel, because like I was just typing up an email to someone, feel, gut, those things don't breed consistency. Rules breed consistency. So I really don't like using that term feel. We do want to try to have rules around things. And absolutely, when I'm looking at daily levels, I pay attention to extension. I will like a breakout much less if it's extended into that resistance level. If anything, I like the short of resistance even more because it's very extended into that resistance level. But how extended is too extended is kind of the gist of your question. It's very much stock dependent. You know, if you're looking at AT&T or you're looking at SI, those stocks are so radically different from one another with such different profiles as far as the volatility goes that AT&T being 5% extended from its daily ADMA might be a massive amount of extension. SI being 5% extended away from its daily ADMA is like absolutely nothing. So I wouldn't say that it's a feel thing. But I don't have a hard, fast rule on a percentage that you could use for every stock either, because it's very much dependent on that specific stock that you are looking at and what the profile of that name is. So you need to understand your stocks, basically. And of course, this Upstart just dropped $1.50 since I couldn't believe that it was at 17. I almost thought about hitting the short button, but it's hard to borrow, and I'm doing this afternoon meeting, and I thought I just must be missing something because it shouldn't have been at 17 to begin with. From Dave S. Now that the conversation has shifted from inflation to recession, I wonder who thought this conversation was going to be shifting from inflation to recession at the end of last year into the beginning of this year. Do you think that we can start expecting CPI to be more routinely stay within the expected daily move compared to the reports from previous months? So what we should see is that the expected move from the options market starts to decline. So instead of being 1.8% like it was today, it begins to decline to lower priced-in moves on future CPIs as the story continues to shift. But I still think that volatility might decline, or the degree of these moves might decline on CPIs, but it could come back with a vengeance on a really big miss. Like today was relatively in line. That's why there was a lot of volatility and not a big movement. If you get big misses in either direction, I think especially on a really hot number, you could get much bigger downside moves again. So that could come back into play if inflation is all of a sudden looking like it's getting out of control again. Or I guess in the event that we had a big miss in the other way, or it came in super light, you could have a big up move and they could squeeze people further. But I still kind of think the risk is a little bit more to the downside now at this point. Everyone's expecting this continued inflation to come down. But yeah, it's more about the economy. Tesla initiated overweight with a $275 price target at Barclays. Sick. From Zachary. I got out of Google at 2:15 p.m. at 93.75 because of the day we had and being down. I figured I would get out and live to see another day. I hate the direction of this question, and I'll tell you why. I know if I had held that last 100 shares, I could have broken 94, and hindsight is 20/20. Besides that, do you think it is bad to get out? Yes. And try to preserve capital with low conviction late in the day? Yes. Or should I have held and risked a bigger loss of the day? Yes. Buy a ticket, take the ride. You took all the risk. I don't know when you entered the position. I know when you got out of it. There's no reason to be getting out of this position at this point. You just survived, most likely, unless you just got in at that point. This big downtick here, it's coming back up. You have all of the risk. You have all of the risk, and you're not being there for the reward. That's what that game plan does. You're not preserving capital. You could have lost all the risk. You easily, if this downtick continued here and it just kept going down your stop loss, you have all the risk. But now the stock rebounds back up, and you're just like, all right, thank God I'm out. You're not there for any of the reward. That I don't think breeds consistency, and that's what we want. I don't like those random kind of decisions where you're trading your P&L. I think you want to have a game plan for your trade and follow your game plan to the bitter end. To the bitter end. So I've been watching too much Vikings Valhalla on Netflix on my vacation week with friends. So we will have our game plans to the bitter end. From Rex. I'm kind of struggling with trend continuation trades. On a daily today, I bet you are. There was no trend continuation. A lot of volatility, especially on a big event day like the CPI or Fed day. Today with the CPI number, the market opened up red and started upticking after the 5-minute candle close. I started to look for relatively strong names to go along, such as Tesla and Nvidia. Tesla, yesterday's daily candle looks like it can give continuation. I agree. At 950, Tesla gave an inside 5. Okay. But I didn't go in because Tesla had a parabolic move for 20 minutes. Great. I like that. And the market approached yesterday's close. Thinking the market might pause a little bit. How would you enter the trade in a market condition like this as a trend continuation without any pullbacks? Yeah, I love the fact that you didn't buy Tesla here. I mean, yeah, you had an inside 5 and up trade that you could take, but this is right when we were starting to talk about how we shouldn't be taking more longs and we should be profit taking. Sure, Tesla ended up being one of the strongest stocks of the market. So you did a great job identifying that layer of probability that actually enabled Tesla to trade much better than the market did. But the other layer of probability that I'm looking at that time of the day is the market. And for me, the market was saying exactly what you're talking about. The market just had a big move. The stock just had a big move. I don't want to chase this price. I'm totally fine with you not getting involved in that. Especially today, I didn't think, and I know that the daily chart is bullish. I really didn't think that today was going to be an uptrend continuation day after that number. I thought today was going to be what it was, which was a choppy, volatile day. So it was very difficult to think at almost any point today that the market was going to be on your side. Really difficult. Really difficult. There was no signal here on this pullback, or maybe on the way up here initially. I remember looking at Apple, saying if Apple can clear this like 152.60 pivot, and maybe the entire market goes for a run, and that happened. So maybe there was some opportunity for some longs off of lows or this first inside 5 and up. or when Apple was giving a signal that the market could continue, or you could still take a little bit of buying, maybe like at 9.55. I didn't like any buying after that. But I like your thought process. But you also had a thought process that had enabled you to identify one of the best stocks in the market. So that's a really good job, even if you chose not to take the trade because of the other things that were against it. Same thing with NVIDIA. And Pat called this NVIDIA this morning. It was like, if the market's able to trade well, NVIDIA is probably the one to go after. And it's the same thought process, that relative strength, news hit that NVIDIA, can really be a winner on the AI arms race or whatever they were talking about. And I read that somewhere that Pat posted this morning. I don't remember specifically. But yeah, I like the thought process. So how would I enter the trade in a market condition like this as trend continuation without any pullback? I wouldn't. Exactly like you didn't. There's nothing wrong with letting trades work without you if you don't feel confident that your layers of probability are there. I mean, of course we have to take some trades. Or if I did take it, you could have taken that inside 5 and up, but you shouldn't take it with a lot of risk. So I have no problem with your thought process. From DJ, have you heard the statistic theory about the market being weaker in the first year of a president's term and strongest during the third year? Not super applicable to Biden thus far. Was just curious if you bought into the idea at all. Yeah, I'm not super familiar with that one. I know how the election cycles tend to work, where after, sell off into the election, buy up after the election. I've seen that happen so many times now. It doesn't matter who wins the elections. It seems like it happens very consistently. But the one that you're quoting here, I'm not familiar with that one. But look, that's a seasonality effect, right? And there are many, many, many seasonality effects that traders like to point to, whether it's political stuff like this or time of the year. And sure, there's a degree of truth to all of it, but just because something has happened in a previous year or in a previous political cycle does not mean it has to happen in this. I've seen plenty of January effects where the January effect worked, and I've seen others where it didn't. I've seen Santa Claus rally where Santa came to town, and I've seen Santa Claus rally where, Santa was just sending out the Grinch to give people coal. So it's just something to keep in the back of your mind whenever you're looking at anything that's seasonality related. Not something I would trade off of, but something to keep in the back of your mind if the technicals are confirming it. From Kyle, going off the question earlier regarding ignition bars, today I was involved in Morgan Stanley. I did like those banks this morning. 100 was the level. Looks like you were involved earlier. You trailed your last piece to the 955 low. That's an ignition bar. Increase on volume on a daily chart breakout. You could have bought $100 for 6 cents risk in Morgan Stanley if you were paying attention to it today. Looks like it worked decent and then would have pushed you out. So you're asking if that was the right spot to trail. That technically was not a pivot. So technically, I like to trail based on my rules, and rule number 1 is a pivot. So technically, I wouldn't trail based on an ignition bar. With that said, I do that. When you've got big, important volume Maribozu candlesticks like this ignition bar, I will sometimes use that low as a stop loss, kind of in lieu of a pivot for a trailing stop. It's not technically correct based on my rules, but I do it as well, so I have no problem with the fact that you did it. Varun on ATVI. Yeah, I mean, this ATVI, I'm not involved in it. I don't have an interest in getting involved in it. It's entirely on whether or not the Microsoft buyout happens or not. Did Warren Buffett sell some of his position? Did I see some of that? I think I might have seen that Warren sold some of it. I'm not sure. So the thing that I would be most encouraged about ATVI about, if I was involved in it, is the fact that Warren had been buying at prices after the deal, which I don't know if I've ever seen him do that. I'll Pat reposting here. Yeah, so he reduced a little bit of ATVI. I don't know if I've ever seen him do that. And my thought process on him doing it, or him even being involved in it at all, is that he thinks that this is a good value whether the deal goes through or not. So he's like, if the deal goes through, I'm going to make money. If the deal doesn't go through, I like it at this price. That's the way he's thinking. So that would give me confidence if I was involved in the position, that that's his thought process. I'm sure if the deal fails, I mean, look, the thing was trading at $65. It's really, in theory, where it's going to be trading if the deal fails. I don't think it's going to get down. Like, that's how it should go. I don't know. I don't really see that happening. So, yeah, I really don't know. In theory, it could trade back down to 65. In theory, it could trade down to 65 if the deal fails, but I would be very comforted by the fact that Warren thinks it's a buy in the 70s. So, what is the room number for the mobile app? I don't know. Pat, do you know how to come up with that? I don't remember how to do that. Bring you down to the bottom of the ignition bar as a stop, just making sure I know technical. Yeah, look, again, this is a trade that anybody could be involved in. You could have a baby-sized account, and you could be involved in this type of trade. Breakout with 6 cents risk. So the low is 99.95, so I would use 99.94 as my stop loss. Cool, back over on the YouTube here. What are your thoughts on revision of CPI from previous period that online people are chattering about, that these revisions to the upside are made to make the new CPI numbers not look as bad or better? I haven't seen any of that yet. I don't really deal with online people too much. There are suggestions on overcoming a repetitive mistake of failure to follow a game plan or following rules due to fear. Fear of being wrong, fear of missing out, fear of failure. I classify them all as fear, as I think they all stem from variations of the same reason. Also, how would that suggestion differ if you were a new trader or a professional trader? Sure. So I always find that the number one way to counter negative psychology is through good game planning. But your specific question is that I can't follow my game plan because of my bad psychology. I can't follow my rules because of fear. That's a much bigger problem. You have to be able to follow your game plan. You have to be able to follow your game plan on stuff. It's the most important thing. You have to be disciplined in this business. You just have to be. I mean, you just need to have more tenacity with your approach and say, hey, this is my game plan. I'm following through with it. That's really all I got for you. The only thing I would say is maybe trade less. I don't know how much you trade currently, but maybe trade less. Maybe just do one trade at a time so that it might reduce that fear factor for you. You're not trying to juggle 7 positions. You're just doing this one trade. All I got to do is do this one trade correctly based on my game plan. And then the other thing is that maybe you're trading too big. You know, if you can't follow your game plan, you can't follow your rules because of all this fear, maybe it just means that the P&L numbers are too consequential for you, and you need to make them more inconsequential so you can focus on the game plan. So focus on the game plan, follow it through correctly, do one trade at a time, and maybe trade a little bit smaller where, you know what, I don't really care if I make or lose this amount of money. It's not that significant to me. What I care about is developing consistency, developing good habits, and then when you develop those good habits, then you can increase from there. When you flicker through stocks to make sure you are not trading in a vacuum, how do you select which names to flicker through? Sure, so I have a universe of probably 50 stocks that I am constantly just typing up and typing up and typing up. I'm also typing up everything I'm in. I'm also typing up the market. I'm also typing up anything that might be correlated to anything that I'm in. For example, I'm trading S. So if I'm trading S, I'm going to type up CrowdStrike, I'm going to type up NET, I'm going to type up all those types of names because I'm trading S, and those ones are going to be correlated to it. I want to know, what's acting stronger, what's acting weaker, what's leading, what's lagging. So pay attention to all that. Next, is cheating on a rule, for example, entering a trade without an inside 5 break on continuation name and play, would be considered a mistake for you and for a beginner trader? Sure. So I'm going to answer this question in an interesting way. Cheating on a rule is not cheating on a rule if you have a rule that lets you cheat on the rule. Right? So you're not like, for me, if I'm looking at an inside candle break, the right way to trade it is to wait for the break of the candle. And I will say that I'll sometimes cheat on the entry of the trade by getting involved before it triggers. That's not cheating on a rule for me. It's cheating on the trade entry because I have a rule that enables me to cheat on the trade entry, if that makes sense. So if I've got these other layers of probability that are in place, I can start with a feeler before the trade even actually triggered, because I think there's a high probability that that trade will trigger and it'll give me a better risk reward. So that's the way to do it. I really think, and again, I was just typing up an email to somebody, I think you can have rules for any and everything that happens in the market, and yet not have a complex system of trading. And I almost think that's a goal. Keep your trading as simple as you can. Keep it simple, stupid, but also have rules in place for everything that you are actually doing, because otherwise you can have no consistency with your trading. Do you think looking at VVIX, VIX, and UVIXI at the same time is too much noise? No. I mean, look, I looking at both the VIX intraday and UVIXI intraday is probably pointless. Just look at one or the other. I only look at UVIXI because I don't have a VIX chart on my Lightspeed software because I don't want to pay for the extra data. So I just look at UVIXI to get a quick snapshot of what the VIX is probably doing on an intraday basis. And then the VIX itself, I just pay attention to what the number is because the number is significant. And I think that VVIX is worth looking at. I mean, Pat has very successfully called a lot of moves based off of the analysis of VVIX recently. So when Pat's calling out that information in the virtual trading forum, I'm paying attention. Okay, cool. It looks like I got through all the questions. It is, no problem. It is about 5 o'clock. It's Valentine's Day. So it might mean I have some things to do this afternoon. So everybody have a fantastic night. I will see you all tomorrow. Adios.